Wake up call. During times of market volatility, many investors could get easily rattled, and emotions and feelings can influence investor behavior. For those of you who are new to investing or are set to inherit wealth from family members, there are some lessons to be learned here. So, how do you keep a clear head and take emotion out of investing? Well, we're going to get into those details right here on UBS Trending. Hi, everybody, and thank you for joining us. I'm Anthony Pastore, and this is UBS Trending. Please join me in welcoming back to the studio my friend and colleague, Bree Williams from State Street SSGA. So nice to have you back in the studio, Bree.
So great to be here and good to see you in person.
You too. I think when we were preparing for having you here, we had something else in mind. But with the recent market volatility that we saw, pivoted a little bit, that's what we do in media, right? And I know you do that in your everyday job, running practice management for SSGA. So something that really kind of stood out to me is after, we see this market volatility, and as I mentioned in the intro, some people might not be used to it as they might be new to investing. But if you kind of take a look, a broader lens, investor sentiment overall has never been as high as it was right before the pandemic. So we've been sort of waffling, and certainly there's a lot going on, a lot of factors there. Get in the head of the investor as we sit here in August of 2024. What's going on? What do you think that is in their minds that is keeping that sentiment on the lower side?
Well, there's a lot of external factors to think about. And I think it's also helpful to remember that investing is ultimately a human endeavor. So you talk about emotions, really important. It is part of the decision-making process. You can't completely separate it, but you can use it as a force for positive action by understanding what your life orientation naturally tends to be. But when you think about those external factors, the reason they're concerns for us as investors is because we can't control them. We can't control inflation, we can't control threat of a recession. It's an election year in the US. All of those things create uncertainty and in many cases a source of anxiety when we think about how is this going to impact my financial security. So I think that is something for us to be mindful of as investors, but what we can control is our investing behavior. And that takes prudence over time, and it's about being resilient. So you want to make good choices, but you want to shift your focus from what is the most perfect investment choice to make to how can I achieve the goals that I've set for my financial plan.
Right. You sent us a stat before you came in today saying 72% of people are confident personally, while only 22% of people are confident about the economy, which really plays into exactly what you're saying. There's that uncertainty about where we're headed. And you mentioned an election year. Every election year, if you look back, there's always that bit of volatility or uncertainty when who knows who is coming into the White House, what their policies will be, what will tax rates look like, et cetera, et cetera. But you also work with financial advisors, in addition to kind of working and consulting with clients, retail clients. What's the difference these days between what you're hearing from advisors about their concerns versus what we're talking about here when it comes to individual investors?
We do see a disconnect where the concerns that you would expect an investor to have, inflation's at the top, election concerns are still front and center, and then there's a recession as well. All of that impacts one's thoughts about will I be financially secure, depending on where they are in the roadmap. Where advisors are a little further ahead is they've miscalculated or underestimating what is the most pressing concern. There's alignment on inflation, but outside of that, there is misalignment. And I think that's because we live and breathe this every day as investment professionals. So we're getting a lot of information on a regular basis, and we have the context because this is what we do each and every day. Where the individual investor, even those that run their own portfolio, they're getting information on a regular basis, but it's from different sources. So there's a lot of white noise, and it can be really tempting to follow the crowd. And when something is causing you emotional concern, how do you shift your focus back to you being front and center? An advisor can help you do that, but I'm not surprised to see the disconnect, but it's helpful for the advisory community to really remember that even though we've seen before the last few days some positive economic signals, investors are still thinking about, well, this is what $200 buys me at the grocery store today. And that has not really come down. So it's front and center for them when they think about the day-to-day cash flow and some of their short-term priorities financially. and are losing a little bit of sight on the longer term.
Yeah, thank you for giving us that separate look, because one of the things that I always think to myself is, if I were running my own portfolio, I would be a disaster, because I'm in it every day, watching the markets. And one thing that we've always encouraged investors to do is, when they're working with an advisor, especially if they're investing in the long term, don't look at your portfolio every single day. There always will be fluctuations. You're thinking about 5, 10, 20, 30 years down the road, depending on where you are in your work life and your sort of life cycle. So it's not surprising to think that advisors may have a different concern than the individual investor does. But it's interesting on that chart to see what those are. Inflation being pretty close, but as you said, everything else, there's some disparity there. And there's also disparity on the institutional side, because when we think about individual investors, what their behaviors are different than what you said you saw when you looked at sort of larger institutional trading that was going on, especially over the last couple of days with the recent market volatility. What did you find there?
So clearly there's, us thinking about what the positioning and the positioning for the long term. It's a long game. And these couple past days don't necessarily make a trend.
That's right.
We've seen a lot of change in the last 4 years, as you referenced COVID. And for the individual investor, that's felt probably like a roller coaster ride. For us, the experience in the financial realm, it being our responsibility to be in front of what these signals are about and positioning the portfolios appropriately. I'm not surprised to see the gaps that we uncovered in the research.
Right.
I think it'll be an interesting remainder to the week. And as we run up to the election itself, I think there are more things that lie ahead. But we'll just have to, continue to be resilient and see what unfolds, and ensure, for the investor's standpoint, they are understanding their portfolio is built for the ups and downs.
That's right.
And it is designed with that outcome orientation for what they seek to achieve, as well as, from a more immediacy standpoint, cash flow needs. What do you need for liquidity and your here and now? So you have some confidence in what is your plan, but also as it relates to what's happening around you.
Right. I certainly, I think I take for granted, and many of us probably do, that sit in our business every single day versus someone who's an investor who is not in this industry, where we're like, oh, we've seen this movie before. The actors may be different, but the situations are similar. And we kind of, I remember in 2008 and 2009, when the great financial crisis was rearing its head, I got nervous and I was like, what do I do? Do I pull out? And the advice was, no, stay in it, for the people who have been through other routes in the markets from the 80s and before. And that was the best advice, because then you're staying in. It's much harder to get 10% on the upside than it is to lose it on the downside. So there's just simple math there. But again, working with a financial advisor who can set up your portfolio, as you said, for the ups and the downs in the markets. There's hedging strategies. There's other ways to protect yourself against inflation risk and interest rate fluctuations. But and here's, I think, the biggest thing that I want to share with our audience, and I know you've been doing a lot of research on this, is that younger investor, the Gen Zs, who are maybe just entering the workforce. A lot of them are graduating college, or some who are in the workforce for a couple of years. They're looking at this maybe saying, wow, this is insane, that I'm freaking out. What advice do you have for them to say, hang in there? We've seen this kind of thing before. A lot of times they go, I don't want to hear from you. It was a different situation. This is different now. Yep. But we all learn those lessons over time.
We do, and it's easier said than done.
Yes.
Let's remember that.
We were there.
Yes.
We've been there. Yes.
Exactly. So for what I think is a positive for investors is they are showing resilience. The fact that their outlook in their personal financial status, and when they think about where they're going, is reasonably strong. I mean, the numbers are almost in the 80s. Yet the economic concerns, the outlook for the U.S., is more concerning in the 20s. It says that there is this engagement, which I think is important. And experience over time will help them become better investors. The challenge is to remember that you always think about pain more vividly. And losing money, even if it's on paper, is not a pleasant experience. So if this is your first time as a Gen Zer, and by the way, the oldest Gen Zer is 27 this year, you're really feeling what it's like to be on the downside.
For sure.
For probably the very first time. But taking more of that sentiment of more optimistic outlook that you have about your long-term prospects, how can you channel your emotions so you're not getting in your own way in how you approach some of the decision makings? Because it is easy to sell when things are, not going in the right direction because you feel like you have to, or you heard someone on TV tell you you needed to do that. But it's just been in this volatile period that we've been talking about a couple of days. Let's see what happens.
Yeah.
And you are playing a long game. So you want to work on your actions, not self-sabotaging what you seek to achieve when it comes to that portfolio that you probably won't need the income from for another 50, 60 years.
Right. And interestingly, something around 82% of millennials are doing their own investing. They're doing that DIY level of investing. And of course, the advice that we always give is work with an advisor. Are you seeing trends like that in Gen Z so far?
So both millennials and Gen Z are really digital natives. I mean, it's part of the fabric of their life, and technology creates opportunities, creates tools. It's a strategy for the advisory community to use to engage investors. The strong place lies in the middle, which is collaboration. So it shouldn't have to be an either or, because there's value in the context of personal guidance, especially as things become more financially complex for you as you progress on your financial life.
Right, because your needs are going to change over time.
Exactly. And if you have the basics down, getting right out of school, you've got some money to invest, the traditional diversified portfolio can get you off to a really good start. But if you're also trying to do things like pay down student debt, work towards buying a home, starting a family, having a plan can help turn what your goals and aspirations are into actual outcomes that have a realistic sense of being achieved in the timeline you would like to see become reality.
Right.
And that's where an advisor can make a difference.
Yes. You took the words out of my mouth. One of the things I really appreciated when I started working with an advisor is they asking me the right questions to figure out what path I should go down and what they'll invest for me. They weren't asking me what mutual fund I liked or what stock I liked. They were saying, what do you want to do in the next 5, 10 years? When do you want to retire? Will you buy a home, a second home? Will you do that? And then from there, they figured out what my risk tolerance was, what I should be investing in, and then took it off my plate, which was a big weight off of my shoulders. And so hopefully it would be for someone else who's listening to this going, you know what, that actually sounds really nice, that I don't have to worry about this every single day.
Right.
Let my advisor or their team do it.
Yeah, they do want to stay engaged, and you should stay connected.
For sure.
And just like your financial life will change over time, your goals may shift, your risk tolerance may also evolve. As you gain more experience in the financial realm, you may gain more confidence. So you want to keep a pulse on your own maturity as an investor as you build resilience and have healthy decision-making framework to guide you. Just like the financial advisors asking those discovery questions to ensure that there's this outcome orientation that aligns with your desires and expectations.
Excellent. Bree, thanks so much. Always good to have you join us.
Thanks for
Good.
having me.
Great advice today, too. So hopefully everybody's taking notes and figuring out their next move. Good to see you, Bree.
Good to see you.
Okay, Bree Williams again, Head of Practice Management at SSGA. So thank you for tuning in, everybody. There's lots more information on our website, ubs.com/views. Take a look at that. Plus, we are all over social media on all the major channels, including our Instagram channel at UBS Trending. So lots of content there that you're not going to find anywhere else. And as always, if you have any questions or you want to continue this conversation, speak with a financial advisor. Until next time, I'm Anthony Pastore. Have a great rest of your day, and remember to keep your eyes on what's trending. We'll see you soon.